Hello, this is James Lindberg from VictoryOptions.com, and thank you for watching this video journal of the trades that I have on and some trades that I'm thinking about as well for the upcoming week. Thank you so much for watching, and let's go ahead and get to the trades that I have on right now. This is a video journal, and I am definitely not an options expert. I've been learning about options here for the last year, but just thought I would do a video journal to invite you in on the trades that I'm in, and as I learn more about options and options trading. So let's take a look at the first one. The first trade I have on here is XLB, X-Ray Lima Boy, and that's the Material Select Spider Fund ETF. And as you can see here, over on July 13th, I bought a vertical spread, a debit spread. Bought the 32 put, sold the 30 put for a 97-cent debit. And there you can see where I bought that. There was a nice descending trend line here that went back from earlier, and I was thinking, well, maybe that trend line will hold, and the trade looked pretty good here for a few days after that. But as you can see over the last week, this ETF has really rocketed up higher. So the trade is going against me right now. As you can see, here is the break-even line for the trade, and then this would be the line that shows the max profit at expiration. That would actually be where that short put is. Let's move over to the Analyze page. We'll take a look at it there, and we'll make sure to set our slices to break even. And as you can see here, 63, almost 64% chance that this trade will be a loser. 36% chance that it's going to be a winner. So the probabilities each day do not seem to be lining up in my favor on this one. So continue to keep this trade open. As you can see, that's where it's trading right now. The underlying is trading right now. I'm thinking that with this trade, if we get any downdraft into this break-even area, that'll probably end up closing the trade early and just trying to take a scratch on it, since my probabilities are getting lower by the day that this spread will become profitable at all. So that's the XLB, the Material Select Spider Fund. Let's go to the next one that we've got on, and flip back over to the charts here, and it is in the USO, the United States Oil Fund. And as you can see here on July 20th, I initiated a long iron condor for August, and that means I sold the 35 call, bought the 37 call, sold the 31 put, and bought the 29 put, and received a credit of 82 cents for that trade. And the trade has been doing fairly well here. It's just been kind of noodling around in the break-even levels right here, you can see. So I'm feeling okay about this trade right now. It hasn't really breached my my short strike yet, and so we'll just let this one continue to play itself out and see what happens here over the next couple of weeks. I'll flip over to the Analyze tab here and take a look at our probabilities. 56% chance that that the spread will be anywhere here within the short strikes and be break even to profitable. And the profit and loss is not exactly 1-to-1. 118 would be the max loss, 82 would be the max profit. I would not let this go to max profit. I would be taking it off earlier than that, but again, that's the risk reward on that. Still, again, more than 50% chance that it will be at least some sort of a winner. So we'll let this one work its way out and see what happens. The other trade that I have on is a calendar spread in the Qs, the QQQQs. And this one is a trade that I initiated through the Red Option Swim Coach. So I'm not going to be managing this one. I'm going to let them manage it, and I'm going to watch them as they manage this calendar spread. Again, the calendar spread put on July 22nd, and the August-October 45 put calendar for $1.03 is the debit on that. Take it over to the Analyze tab. I did put the break-even slices on there as well. It doesn't really make as much of a difference with this since it'll be rolled prior to expiration, and the underlying could be just about anywhere here when they decide to roll it. So, but again, 46% chance of it being break-even by expiration, and there's where the underlying is trading right now. And like I said, I'm going to let Red Option tell me when to roll this. The rolls right now, that front month roll is trading for approximately a 60-cent credit. So that's pretty good. That's more than half the cost of the spread. So that one is looking good as well. It's got a little bit of a profit to it too. The last two things I'd like to share with you are two pairs trades that I'm looking at. I love trading stock pairs, going one long stock and then hedging it by going short a different one, and more of a market neutral position. And so we'll switch over to the charts here and my pairs charts, and we'll take a look at the first pairs trade, and that first pairs trade would be not that one, but will be this one. GDX, AU, GDX, and AU. And my thought is that with this one, this pair, as you can see right here, traded at $7.70. That's the spread price. And my thoughts are that if this pair reaches this level down here, this support level that it's found in the past, that it might be good to initiate a long trade in this pair, going long GDX and short AU. Looking at the RSI Wilder here, you can see that it's not very close yet to the oversold area, and this one just briefly touches it. It doesn't really bury itself in that area very much. So, so I'll be looking for the RSI to come down. Also checking out the distance from the mean here, the 10-day simple moving average. Taking a look at that. We can see that in the past, extreme ranges on the bottom side have been $2.02, $1.17, $1.05. It closed at 98 cents on Friday. We'll take a look at intraday charts. We could see here that's where it closed in that area right there. And it got down as low as 93 cents there, and as low as $1.25 away from the mean. So I'm thinking that on Monday morning or throughout Monday, if this thing trades down in the dollar area as a distance below the mean and seems to stabilize, then it might be good to go along this pair. So that's one of the trades that I'm thinking about, the GDX AU. And then the other pairs trade that I've got on my radar screen is BRCM ADI. It's BRCM. And then the other stock would be ADI, two semiconductor stocks. You can see this pair is more of an uptrend, and so I like to play pairs like that from the bottom and play them long. And so you can see the distances from the mean in the past. The extremes have been 95 cents, 54 cents, 63 cents, and then I believe it closed around that 53-cent area on Friday. And so when you look at something like this, it could be that in this 50-cent range, 60-cent range, that it's going to be a little overextended and might revert back to that mean. So let's take a look at the intraday chart, and you can see here, 54 cents where it closed on Friday. You can also see that a couple of days back, it got down as low as the 60s here, 69 in that area. I think I maybe saw a 70 there as well, 72 cents right there. And so I'm thinking that it comes down into that 60 to 70 cent area again, and stabilizes down there. That this might be a good pair to go long on. Be long BRCM and short ADI, and there would be a dollar weighting those share sizes, not just going straight 100 on each side. And if you want more information about that pairs trading, you can go to shadowtrader.net. the link is on my blog there. You can learn more about the way they do pairs trading on there. So again, that's what I've got for this week. I hope to, if I have some time each weekend, to update it and see how the trades are going and maybe think about the trades that I'm thinking about. And again, this is just a video diary, a video journal of my trading, and hope you enjoyed the video and will join me as we learn together. So again, thanks for watching, and hopefully we'll see you next weekend.